morning, everyone. Welcome to the October 21st Finance and Audit Committee meeting. I'd first like to recognize that we are on the traditional territory of the Sinemic First Nation. Our clerk today is Ms. Sheila Gurry, and today's regular meeting of the Finance and Audit Committee will be held in accordance with the Community Charter, Council Procedure Bylaw 2018 number 7272, and Ministerial Order number M192 governing open meetings during a state of emergency, and the Provincial Health Officer Order regarding mass gathering events. Therefore, members of the public are required to observe meetings virtually and not attend in person, and question period will be suspended throughout the duration of the provincial health orders in effect. The first item on the agenda is the introduction of late items. Ms. Curry.
Thank you, Chair. There are no late items this morning.
Thank you. So we would need a motion to approve the agenda. Moved by Councillor Thorpe, seconded by Councillor Hemmons. All those in favor? Next up is the minutes as circulated. We have the minutes from the September 16, 2020 meeting. Moved by Councillor Hemmons, seconded by Councillor Thorpe. All those in favor? Thank you. We have no presentations or delegations, so we'll move on to reports, the first being the Facilities Valuation Study. Mr. Sims.
Thank you, Mr. Chair. I'm just going to briefly introduce Mr. Rosen to this subject. This is really about developing, you heard Ms. Mercer talking about our asset management plan for next year, and you'll hear more and more about that as time goes on, but this is one of those building blocks. So.
Welcome, Mr. Rosen.
Thank you, Council. Good morning. So as Council is aware, the City has a corporate asset management plan that we've been sort of developing and maintaining for more than a decade now. The last major update to it was in 2016 and 2017. So we're planning to undertake another major update to it in the next sort of year, maybe two. One major component to this upgrade is going to be really focusing on the facilities aspect of the overall corporate asset management plan. So the facilities group has been working on these detailed condition assessments over the past year or so, and will continue to do that to really improve our understanding of the facilities asset conditions and the costs associated with that. We're also planning to undertake facilities asset management plan. So that'll look at things like, what assets we have, what do we need to save to sustain our level of service, what facilities are priorities for renewal, that kind of thing. So that's going to be going on over the next sort of year or two as well. But a foundation for both the corporate asset management plan, the facilities asset management plan, is really a good understanding of the value of our facilities stock. In the past, with our corporate asset management plan, we've used the valuations that are done for insurance purposes. And although they're pretty good, they're really not the same thing as looking at it from the perspective of if you wanted to renew a facility, what would that cost today? So we need that information to really prepare a reliable financial asset management plan. So this report really is this decision that we'd like Council to make is really around allocating some grant funding from 2021, accelerating that into 2020 to allow us to start a facilities valuations exercise that will really form the basis for moving forward with this asset management plan. So I'd be happy to answer any questions if there are any.
Thank you. Are there any questions? Councillor Turley.
Thank you, Chair. Through you to Mr. Rosen, or anybody else who's able to answer. I always was under the impression, and it's probably my ignorance, that insurance, generally, one of the things you could purchase is replacement value of, particularly with your house. And I'm just kind of wondering what the difference, as you indicated, between insurance requirement perspective and replacement perspective. Is it a huge difference, or is it a simple matter of upgrading the insurance if necessary to take place of that?
Through to Councillor Turley. The difference really depends on the facility in question. So if you're looking at a really old facility, let's just say, for example, you're looking at a 40-year-old facility that's really sort of at the end of its useful life. I know we don't like that word, but
Well done.
So the valuation on a facility like that, from an insurance perspective, could be quite low. But the reality is the replacement value of that same facility could be quite substantial. But if you compare that to a much newer facility, the insurance valuation could be quite similar to the replacement value. We have quite a cross-section of ages of facilities within the city, and so to make sure that we have a good understanding of what it costs to sustain the service, we need to know what those replacement values are in today's dollars, not necessarily what the legacy value of something is from an insurance standpoint.
Thank you.
Councillor Armstrong.
I just do have a question on that. Like, would you be looking at like boilers, et cetera, in there, and would that be allowing for bulk purchasing if we knew that something was near end of life, if it was in one document to find it?
That's a very specific component of a facility, and that's much more detailed than what the intention is here.
Perfect.
The intention here is really around, we've got over 100 facilities that are going to form part of this bundle of facilities we're looking at. And just for example, like a pool, for example. We've got some pools. How much does it cost, say, per square meter to replace a pool of this utility, this size, with these features and so on, with today's current market?
Perfect.
So that's the kind of question we're going to be looking at.
Thank you.
Councillor Bonner.
Oh, thank you, Chair, and through you to staff, if I may. What does the $50,000 actually, I know what the outcome is. How do we go about it? Like, is it paying for staff time? Are we hiring a consultant? What is the $50,000 actually to pay for?
So the intention would be that we're going to hire a consultant that has data and expertise in creating value, or to value these types of things. So the consultant that would normally do that kind of thing, they're called a quantity surveyor. It's a very specialized consultant, and they track a lot of data on various types of construction projects, whether it's sort of linear civil infrastructure or it's a facility, and they track information on the types of facilities. They're really an expert in cost estimating. And so we'd be looking for a consultant that does that and providing them the information around the facilities that we have so they can do we are envisioning mostly a desktop exercise. They might require some sort of site tours and a little bit of looking around, but for the most part it's, hey, we've got a pool with, 40,000 square meters of space, it's this age, it has all these various services. How much would that cost to replace that? So not just the construction costs, but all the various soft costs like project management costs, design costs. If we had to rebuild the whole facility, like the parking lot and maybe frontage works and services, and maybe there's like other utility costs, they have to factor all that in, because that's really what we would have to budget for if we really wanted to replace this facility. And so we want them to look at all of that. Anyway, so it's going to be some staff time, but also a specialized consultant.
And when we're done with the exercise, is it your expectation that you're probably coming back to council saying, based on the evaluation, we understand it's going to be this much money to maintain the services over X amount of years, and we don't have that much money, so we're going to be looking at a reserve to accommodate this? Is that our plans?
So ultimately, this information is going to feed into this facilities asset management plan, as well as the corporate asset management plan, which will look at that higher level financial piece. This is really just some data to feed into that larger process.
Okay, thank you.
Councillor Turley.
Thank you, Worship. The other question I had was with regard to the Union of BC Municipalities Strategic Priority Fund grant. Is that a grant that we are applying to add on top of the amount of money we're talking about, or is that a grant that has already been used?
That's a grant that we already have, and we've got it over multiple years. But we have a certain amount allocated in 2021, and what we want to do is we want to accelerate that to 2020 so we can start this valuation this year.
Thank you.
Councillor Armstrong.
I'd like to move option 1.
Thank you. I do have one question.
Sorry.
No, that's okay. So it was moved by Councillor Armstrong, seconded by Councillor Martman. Mr. Rosen, will this sort of give us a snapshot of 2021, or will the report also include, obviously the replacement cost of each facility is going to probably get higher over time. So will this sort of project out into the future as well? So Bevan Pool in 2021 or 2022 costs X amounts of dollars to replace. In 2030, it would cost approximately Y amount.
So you're right. I mean, if we were to replace something 10 or 20 years from now, the cost will be different than what it is today. But projecting what that future cost is a little bit of a different exercise than coming up with the current replacement value.
Okay.
So our goal with this exercise is to come up with the current replacement value. And then when we're doing the corporate asset management plan, then we can consider whether we need to escalate depends on how the model's built. So we may or may not escalate that cost depending on how we build the model. So it's a separate exercise.
Thank you very much. Any discussion on the motion on the floor? Councilor Martman.
Just wanting to confirm, did I hear you say that it will be evaluating over 100 facilities?
So right now in our facilities database, we have about 200 facilities. So for this exercise, we don't need to do all of them.
Right.
So we've pared it down to a little over 100 facilities that we think warrant having this kind of scrutiny undertaken. So it's about 100, I think maybe 110 actually.
So really, when you break it down, if you average it out, you're looking at about an evaluation of $500 per facility, which equals $50,000, which sounds quite reasonable. Thank you.
Thank you. Any discussion? All those in favor? All right, thank you, Mr. Rosen. Moving on, the building envelope project at 25 Victoria Road. Mr. Harding.
Good day, Chair. Just an information report on the our phased approach to this building, and if you have any questions, here's an information update. Mr. Groot is here to answer any questions if you have, particularly to the project. So it's more of just an information report and update on the project.
Thank you.
If there's any questions?
Any questions for Mr. Harding or Mr. Groot? Seeing none. Thank you. Next up is the Community Resiliency Investment Program, Fire Smart Community Funding and Supports Program. Deputy Fire Chief Jeff Whiting.
Good morning, Chair, members of Council. This morning, I am asking for Council support in applying for a grant in the amount of $49,600 for the Community Resiliency Investment Program. These funds will be used to promote wildfire prevention education to citizens and conduct community-based wildfire prevention activities. The goal is to reduce the impact and risk of wildfires to the city. The Community Resiliency Investment Program was established by the provincial government in 2018 with the goal of reducing the risk and impact of wildfires on communities in BC. The program includes two streams, one that addresses wildfire risk on Crown lands, and the other being the Fire Smart Community Funding and Supports Program, which is administered through the UBCM. In 2016, the city conducted a community wildfire protection plan to develop strategic recommendations to assist in reducing the risk and impact of wildfires to the community. The Community Wildfire Protection Plan identified the wildfire risk to the city as low, with areas of moderate risk. Recommendations from the report included participation in the Fire Smart program, communication and prevention activities in cooperation with impacted neighborhood associations, fuel management activities, and community education on wildfire risks and prevention strategies. The 2014 City of Nanaimo Hazard Risk and Vulnerability Analysis identifies wildfire as a medium probability threat. The activities this grant would support are in line with the recommendations of the Community Wildfire Protection Plan. The planned activities include Fire Smart weekends, planned in collaboration with the neighborhood associations in the Protection Island, Long Lake Heights, and Cottle Hill neighborhoods. These weekends include resident education and provision of a chipper and bins for removal of natural debris from the area. Fuel mitigation activities in Neck Point Park, which is identified as a moderate risk area. Planning and preparation of a full-scale Wildland Emergency Operations Center exercise involving various city partners such as the BC Wildfire Service. A public education campaign undertaken by fire crews. The attendance by one staff member to the International Association of Fire Chiefs Wildland Urban Interface Conference and the BC Fire Smart Conference. And it would also allow one staff member to co-facilitate at 3 local Fire Smart representative conferences in BC. The Fire Smart weekends have been held in the past on Protection Island and in the Long Lake Heights neighborhood with excellent reception from the community. The activities included in the grant application have been reviewed and approved by a BC Wildfire Service Wildfire Prevention Officer. The grant is for the amount of $49,600. This is the maximum grant amount which communities in the low to moderate risk group can apply for. There's no additional funding budgeted for these programs outside of this grant. And if approved, the 2021-2025 financial plan would be amended to include this grant.
Thank you. I have a question from Councillor Gesselbrock.
Thank you, Chair. No, thanks for this. Definitely support it. Very important work. As I was reading through the report there was one section, I think it was a typo, it was for $49 million, and I don't think that was correct.
That is not correct. We would be the safest community in North America if we had that amount.
Yeah.
No, the total amount is $49,600.
Any questions for Deputy Chief Whiting? All right, thank you very much. We do have a recommendation. Mr. Rudolph?
Your Worship, or Mr. Chair, I'd just like to point out that this is the first meeting where the Deputy Chief has attended in this new role. He was appointed to this role last week. He's one of two Deputy Chiefs. Tim Doyle is the other, and just wanted to congratulate and welcome him to Council.
Thank you very much, and congratulations.
Thank you, Mr. Rudolph, and members of Council.
Councillor Martman.
Move the recommendation.
Second by Councillor Hemmens. Any discussion? All right, we'll call the question. All those in favor? All right. The next step report is the 2021 Social Planning Grant Increase. Mr. Lindsay.
Thank you, Mr. Chairman. Bringing forward today an opportunity, we believe, to add $30,000 to the existing grant programs for 2021. This is money that was collected through rezonings for cannabis retail stores. So the recommendation for Council is to increase that level, which will result in an increase from the existing $85,000. $85,000 is what we've been putting in this grant program for a number of years, and specifically allocating this additional $30,000 to the social response grants. The other option in the report, Mr. Chairman, is that we maintain the current grant levels, but instead of, and we wouldn't require the same level of taxation. We'd basically be using this money to offset taxation. Staff's recommendation, there's obviously a need in the community. Our recommendation is to maintain the contributions coming from existing sources and add this money to that.
Thank you. I have a question from Councillor Turley.
Thank you, Chair. Through you to staff. I'm a little unclear, well, more than unclear, of what the reference is to under harm reduction, overdose prevention, safe ride programs. Is that, I don't understand what that is.
Sorry, I'm not sure I understand the question. So in terms of clarity about what exactly the program is?
Yeah, it just says safe ride programs, and I just don't know.
Yeah, so I'm not sure I have an answer specifically on that case. What I would say is that each year, you know, there's different programs that are funded through this grant program, and possibly that was the program for 2020, I believe. May not be that this money is used for that going forward.
Okay.
Councillor Armstrong.
Just to Councillor Turley too, that could be like the Project Red Nose where people would drive people home after being at the bars. But my question is, would that be able to be used for like, I do have a motion upcoming for like the nonprofit addiction services that are support teams. Would they be able to apply for that for like, to use for rentals of, rentals of properties while the pandemic's going on because they can't be using their own right now due to the COVID restrictions?
Yeah, through the chair, I think it's pretty wide open in terms of applications, and ultimately council would make that decision. We'll bring forward recommendations and council can make the decision on those grants.
Thank you.
Councillor Bonner.
Thank you, Your Worship.
Chair, please.
Chair Brown. In the report, it talks about detox and treatment programs, of which we have a few in town that are underfunded. But in the guidelines and criteria, ineligible products refers to ongoing operational expenses incurred during the normal course of business. Is that referring to admin expenses like telephone, rent, that sort of thing? Because I would think if someone is in the business of doing detox, that would be ongoing operational expenses?
Mr. Chairman, I think there'd be, I understand the question, I think there'd be an opportunity to look at the grants to allow for an increase on service level of a program. I would say, for example, I'm looking at many of the grants that were issued in 2020, and they do allow for example, John Howard was a recipient of a grant in 2020, and I think they could be potentially eligible in 2021, yes.
Thanks.
Councillor Martman.
Thank you. Yeah, in previous experience with reviewing these grants, etc., a lot of times it could be an operation like Haven House, but then what they do is create one single program that could be funded. So then you're not working with the operations, you're looking at a specific program that addresses a need, if that helps.
Councillor Gesselbrock.
Thank you, Chair. Through you to Mr. Lindsay. Say, for example, we wanted shelters to open early. I'm not sure if this money is even close to being sufficient, but would they apply for the grant, or could we simply just use this grant money to be like, to get these shelters to open earlier?
Through the chair, I think in those situations in the past, anyways, councils looked at your housing legacy funding to fund scenarios like that. I think what I'm hearing from council this morning is maybe there's a need to review the structure of this grant program to look at all of these options on what can potentially be serviced. But no, historically we've used the housing legacy reserve fund for
to just
shelter,
follow up. I mean, for
beds.
something like that, there's other pots of money that is available, which is great. I think this is excellent and much needed to increase funding levels and for these grants, and as long as that some other issues can be dealt with other pots of money. Thank you.
I have no one else in the queue, and we do have a motion.
Second.
Moved by Councillor Martman, seconded by Councillor Armstrong. Any discussion on the motion? Seeing none, we'll call the question. All those in favor? Thank you, Mr. Lindsay. Next up is the asset management update. Ms. Lagan.
Good morning, Chair. Thank you. With budget discussions looming shortly in November, we thought it was prudent to bring this report and provide some background and rationale for the recommendations with respect to extending the annual 1% property tax increase contribution to the General Asset Management Reserve for 5 years, as well as extending the 2.5% water user fee increase just for 2021 for the Water Asset Management Fund Reserve. We want to include this into the 2021-2025 financial plan and wanted to have the discussion here. And Ms. Mercer has more details that she's going to do a short verbal presentation for you.
Thank you very much. Ms. Mercer, welcome.
Good morning, Council. So, Council was introduced to our asset management plan in detail in December 2018 when we presented the draft 2019-2023 financial plan. And so I won't go into the great amount of detail we did with that, but I'll give kind of a high-level overview of the plan, our history of the plan, and then go into some discussion about why we're making the recommendations. So what is asset management? So per our asset management policy, it is an integrated life cycle approach to effective stewardship of infrastructure assets to maximize benefits, manage risk, and provide satisfactory levels of service to the public in a sustainable manner. So as a local government, we've always done asset management. We build and operate assets to deliver services. So in 2008, changes in accounting standards and a higher profile for asset management best practices, we knew we could and should do better. So the city created an asset management steering committee, which led a number of key initiatives, including 4 asset management updates, the development of an asset management strategy, and an asset management policy, which was adopted by council in May of 2018. So the asset management strategy provides a clear line of sight between high-level objectives and day-to-day activities carried out to deliver and manage assets. The asset management policy describes the organization's intentions and directions for asset management as formally expressed by its senior management. It describes the principles and framework adopted in applying asset management to achieve the organization's strategic objectives. So that's kind of a high-level overview of what we have and the history of how we got there. So in 2008, staff began developing the city's asset management knowledge, and in 2010 presented the 2010 asset management plan to council. And this plan mainly focused on public works and asset infrastructure renewal only, and the purpose was to educate and seek council's approval to move forward. The 2012 asset management update, presented in January of 2013, was expanded to include the renewal of all city infrastructure and projected funding needs. A funding gap was identified and recommendations were made to create asset management reserves to close that gap. So based on the recommendations out of the 2012 asset management update, 3 reserves were created and the following allocations were approved. So a 1% increase to property taxes for the years 2013 to 2017 to fund the general asset management reserve, a 5% annual increase to sewer user fees for the years 2013 to 2017, and a 4% increase to user fees for 2018 to 2022 to fund the sewer asset management reserve, a 2.5% annual increase to water user fees for the years 2013 to 2020 to fund the water asset management reserve. So all of those were approved and put into place. In 2017, the 20-year investment plan and asset management update was presented to council. And this update included projected investment required over the next 20 years for current infrastructure renewal, for new upgraded infrastructure required due to growth, and for specific investment. So we planned for what we had, as well as we were planning for what we would need to have, or what we plan to have. So the update explained that the city owned and operated $3 billion worth of infrastructure assets and identified a total projected funding gap of approximately $258 million. Of that funding shortfall, $141 million came from general revenues and reserves. So we knew we needed to do some work there. So based on this information, council approved continuing the 1% increase to property taxes to 2022. So that is kind of a high-level overview of how we got to today. So for 2021, we had originally planned an asset management update to be completed. However, some factors such as staffing constraints, the COVID-19 pandemic, workload shifting has delayed that start, and to late 2021 or early 2022. With the anticipation that it would be brought to council for consideration in late 2022 or early 2023. Staff are recommending that the 1% annual tax increase continue for another 5 years or until this update is completed, whichever comes first. So if the update was completed before the 5 years were up, any recommendations out of that update would override whatever we have for the 5 years. So we know that the asset management reserves are effective. In the 20-year investment plan, we noted that we were making progress on closing that gap, but we still had a funding gap and needed strategies to continue to close it. So the benefits at this point of approving the continuation of the 1% are, it will allow staff to continue planning and prioritizing projects for long-term infrastructure renewal and growth based on available resources. So it'll allow us to continue planning out without any funding constraints, any further funding constraints. Because what we're finding now is that in year 25, or in the 2025 year of our 2021 to 2025 draft financial plan, we are having some funding constraints as we fall well below our current minimum balance in the general asset management reserve. So what this will allow to do, Ms. Fuller's department, is to, by continuing the 1%, she can continue to fund out that 10-year plan without any additional funding constraints. It'll eliminate that funding shortfall in 2025 and future years. So, and this shortfall comes before any inclusion of the condition information that's going to come out of the facilities and parks amenities condition assessment program that Mr. Rosen has just spoken about. So the next asset management would not be completed until all of that information on the facility assessment is incorporated into the asset management plan, because we'd want the most up-to-date information on investment requirements and any funding needs for the next 20 years. So that's pushed until we finish that assessment, we wouldn't complete the asset management. So that could drag it out a little bit longer as well. So this will just allow us time to complete the update without possibly widening the funding gap even further. So those are kind of the general reasons why we want to extend it until that asset management update is done.
Thank you, Ms. Mercer. I have a question from Councillor Thorpe and also Councillor Armstrong.
Okay. Thank you, Chair. Through you to Ms. Mercer, thank you very much. I strongly support this this initiative, and I think it should be continued. To me, it's long-term planning, and it's designed to smooth out potential tax bumps, drastic bumps further down the road. My question, though, is just for clarification. When I think infrastructure, and I think when most people think infrastructure, they think public works, they think pipes in the ground, sewer, water, and so on. And I know this fund applies to that, but you've also referenced facilities. And we've heard earlier today about predicting replacement costs on our facilities. So could this fund be applied towards replacement of some of our brick and mortar facilities?
Through the chair, yes, this plan encompasses all of those. Currently, I think there's 100 building facilities within the asset management plan. So if the facility assessment condition assessment program will give us better information into that asset management plan, which we already have in there. It just gives us better data for it to project what we're going to need.
Thank you. I think in the past I've suggested that an idea would be to have a similar fund just for facility replacement, but I'm pleased that this encompasses that to some extent at least. I can see a big gap coming up down the road.
We know that there is going to be additional funding needed once we get all of the updated condition assessment information. We know that that is probably going to put pressure on our funding gap.
Thank you.
Councillor Armstrong.
Thank you. In the past, have the councils been consistently applying the 1% to the asset management?
Yep.
Or has there been any change in that?
No, through the chair, it's been consistently 1%. So when we do the update, the asset management update, the recommendation could be 1%, or it could be a different amount depending on what the outcome of that update is.
So you think for now, though, like 1% is sufficient? It could change to up to 2%, or it could go down?
Yep.
Yeah, no, I think this is like Councillor Thorpe. I think it's definitely needed to maintain and be prepared so we don't get caught out having to spend or borrow hundreds of millions. Thank you.
A couple other questions now. Councillor Bonner.
Thank you. I'm not going to be supporting this recommendation, and it's not because I don't believe in asset management. I 100% believe that we need to do this. This is a great idea, wrong time. And I've said this before at our last budget where we voted on that, and this specifically for the same reasons. I just think that the fact that we're in this pandemic and the customers that I have, the clients that I have as for my hosting company who are hurting, and some of them are going bankrupt. This is not a good sign. My questions would be is how much, I'm looking at the Appendix A on the attachment to your report, but it only, I think, goes up to 2017. Can you tell me how much is going into our asset management plan right now, as in 2021? How much went into it?
I can get you that information. I don't have it on the top of my head currently, but I can totally get that for you.
In 2017, I think it was 4.7 million. Yeah. So it's my understanding that this 1%, we added them all up, and each year, all of those 1% is going in year after year after year.
Yes.
So we will be contributing to our asset management fund this year, even if we don't raise it 1%.
Through the chair, that is correct.
Right.
Yes.
So, and you mentioned also that there would be constraints in our 10-year plan, but that's assuming that we don't change our 10-year plan. There's a possibility we could change a 10-year plan and we wouldn't necessarily have constraints.
Through the chair, that is a possibility if we changed, if we moved out or delayed different projects, yes.
And is your assessment here of what our shortfall will be based on receiving no grants from the federal government or UBCM for infrastructure updates or the province?
Was there grants in there, Wendy? So we only, in our budget, we only account for grants that we know we have. So any known grants at the time of this update would be included. After because 2017 was the last time, this really based on 2016 data. Any grants that we would have received after that would not, if we didn't know about them then, they wouldn't be included. So when we do our update, any known granting at that time, we would include in the update.
When it comes back to council, it would be nice to know how many grants we had over the period of 2017 to now, sorry, 2013 when we started this process to now, and what would be the average amount of grants each year. I'd kind of like to know that information because one can, in theory, assume that it'll continue roughly on the same in the future, but based on what we're seeing in the past. There's no guarantees. I completely understand that.
Yeah.
So I would be quite willing to say that we start the 1% next year and we just give it a break this year. That'll certainly help out our citizens in town. The other thing I had a question was in your report, one of the paragraphs you refer to, extending the 1% asset management contribution for 5 years will allow staff to continue planning for the long-term renewal of existing infrastructure while they work to complete an updated asset management plan. If we don't agree with the 1% asset increase this year, does that mean that work stops or will you continue it regardless?
No, it would, I'll let Ms. Fulla respond to some of your questions, but it wouldn't stop. It would just mean certain things would have to, the year 2025 of our plan, we would need to do some work to move around things to make sure that we have enough funding level in that year to meet our minimum balance.
Okay.
I'll let Ms. Fulla.
Thank you. Through the chair to Councillor Bronner. So in the 2021-2025 draft financial plan that will be coming to you next month, the contribution to the asset management reserve is about $8.7 million in 2021. And that's already been approved by council, not to say that you can't change your mind when you're deliberating on the budget, but you have already approved that 1% increase as part of those recommendations, and we have based our 10-year project plan on having that funding available. Should you choose to change that, that would mean we would have to go back and look at the timing of projects because it would cause us funding issues. As Ms. Mercer said, we do have funding challenges in year 5 of the plan. Right now we fall below, because as you know, per our reserve policy, we have a minimum balance for that general asset management reserve, and in 2025 we currently flow quite significantly below that minimum balance. So if we don't extend this 1% until we get that next asset management update, then really we'll have to look at the timing of those projects. So that causes problems for Mr. Groot and Mr. Rosen when they're doing their project planning. Now we're looking at pushing things out because we don't have funding for it. So extending this 1% gives them that assurance that they can continue with that planning while we work on a next update. Otherwise, we could be prematurely pushing out projects that we don't need to.
Do we have a list of what projects might be in jeopardy of not having funding?
That we would have to go back to the departments if we didn't have the funding, and we'd have to ask them to review their project plans. They'd have to look at their risk, and they would make that decision on which projects they wouldn't want to change the timing on.
Well, I understand that is if we made the decision. I'm just thinking prior to that decision, you mentioned that we have constraints on some in 2025.
Yes.
Do we have a number? What projects might be in jeopardy?
So right now we have done the 2021-2025 financial plan going below the minimum balance in 2025. If council chooses not to extend the 1%, then likely what we'll need to do is go back to the departments, and I will be asking them to move some projects out of 2025 so that we're not below our minimum balance.
Okay, so now that brings up my question. If we decided to go below the minimum balance, we could do those projects.
We can go below the minimum balance, but we need to have a strategy in place to get back above the minimum balance. And currently, right now, with the way our 10-year project plan looks, we go negative in the general asset management reserve in years 6 through 10 if we actually wanted to complete all the projects in our 10-year plan. So, I mean, we will definitely be coming back and asking for some sort of contribution to the general asset management plan on our next update, an annual increase. We just can't tell you right now, is it 1%, is it 2%, is it 0.5%? We really need that information from the facilities, because that's going to have a big impact.
Okay, thank you.
Councillor Gesselbrock, and I will note, I don't believe Ms. Mercer has finished her presentation.
No, I have not.
So there may be questions that are answered, but okay. And I also have Councillor Hemmons. Okay. Ms. Mercer.
Okay. So in addition to the asset management update, staff are currently working on a user fee review. So this review looks at sewer and water user fees to determine future customer rate increases needed to support sustainable services and identify changes to the rate structure to each utility to improve user equity, conservation, and administrative efficiencies. So similar to the asset management update, reprioritization of workloads due to COVID-19 has delayed us bringing that review to council in 2020. So right now we are planning to bring that to you in early January for presentation, so you have review and you can discuss the merits of that review and the recommendations. So as noted earlier, the 2.5% increase to water user fees for contributions to the Water Asset Management Reserve ended in 2020. So it is anticipated that a recommendation out of that user fee review will recommend some form of increase to the Water Asset Management Reserve will come. And at this point, we will be presenting that information. So to ensure that there is no funding gap due to the delay of the user fee review, staff are recommending the continuation of the 2.5% increase for 2021 only, and that will allow us to present the review to council, have public consultation, and discuss any potential changes in 2021. And any approved recommendations out of that presentation and review would be implemented effective January 1st, 2022. So just to put a dollar number around what that increase, that 2.5% increase would be, for a single family house that uses 220 gallons per day, and that 220 is what we use for all of our calculations for water, is approximately $15.16 per year. That's what the increase would be to an average house that uses that water consumption. So that is the end of my presentation. Be happy to answer any questions.
Thank you, Ms. Mercer. Councillor Gesselbrock.
Thank you, Chair. A couple questions. First, just clarity on Councillor Thorpe's question. The renewal costs for facilities is already in that 20-year asset management plan. The work that we're going to be doing is just to get greater acuity on exactly what those costs are, and our estimates may be higher or lower depending on what the outcome is of that.
Through the chair, to Councillor Gesselbrock, that is correct. We will be updating the information that's already in there and adding any new additional things that are not currently in the report.
Great. Second question is just with the increase to the water user rates, is a large part of the need to put more money into that reserve, sort of down the pipes, like in 2027, the potential dam replacement that we were looking at?
Yes. Okay. Yeah. So, and out of this review, there will likely be a recommendation to continue. It might not be 2.5%. It could be something lower, but we at this point, we're continuing to recommend that it continue for 2021 and any changes start in 2022.
Great, and just the last comment here, I think that this type of long-range planning is super important, looking at the full life cycle of our assets, and I think that still there is a large gap in sort of our understanding of natural assets and understanding what they provide sort of a monetary wise and what we need to be doing to maintain and improve them. So I look forward, I think that's scheduled in 2022 where we might be doing a more in-depth look at, identifying what are our natural assets and then looking at sort of what the cost implications are and what type of long-range planning around that we need. And I think that's still, quite a large gap, but we're getting there. So thank you for this work.
Through the chair, yes, the natural assets is the newest topic on the accounting radar, it seems, through conferences and whatnot. So there's a lot of traction there to create robust programs that deal with natural assets. So that would obviously be something we'd be looking at in the future.
Wonderful.
Councillor Hemmens.
Thank you, Chair. Councillor Gesselbrock asked my question, but I will say that I'm in full support of the recommended motion. I think it's ultimately pragmatic as we see construction costs rising and a growing list of facilities that are aging, et cetera. This is just good long-range planning, as Councillor Gesselbrock put it. So thank you.
Thank you. No one in the queue. We don't have a motion on the floor, even though there's been a lot of speaking to it. So I would be looking for someone to move the motion.
Yeah, I'll move the recommendation, number one.
Number one, thank you. I think we'll take them separately just because they're not necessarily tied together. So moved by Councillor Armstrong, seconded. Thank you, Councillor Thorpe. Would you like to speak to it, Councillor Armstrong?
I just think it's really important. To me, this is base that you have to always do every year, or we're going to be in trouble if we don't do it this year. Maybe when the thing comes up, all of a sudden it's going to be a 6% increase because we keep putting it down. So to me, the 1% is critical, and I'll be in support.
Thank you. No one in the queue here. I will express my support for this as well. I think it's something like local governments own 60% of the assets, but they get 10 cents back for every dollar taxed in this country. From someone who spends a lot of time in other local government budgets, I really want to thank our financial team and past councils, because I do think we're quite far ahead in comparison to many other jurisdictions where the funding gap, there's no way they can pay for it. So I will support this. I do agree a little bit with Councillor Bonner's sentiment just in respect to capital planning. I think I have concerns that we're not necessarily developing our capital plans based on strategic direction, rather that it's the opposite. A lot of capital things emerge and thus shape strategic direction. I'm not sure that's the best approach for delivering on projects, because the weighting hasn't been done in terms of where it fits in to the elected officials' decisions around the strategic direction. But I will support this because I know as much as I would love for that number to drop, any experience I have in this, when the further granularity is done, the number always increases. So I think it's very prudent. Any other discussion? Call the question. Oh. Number one, yeah. Oh, all in favor? Motion passes. We do have a second motion.
Opposed.
You're proposing to move that one? Okay, opposed to...
Second, number two.
Okay, so we have Councillor Armstrong moves motion number 2. Is there a seconder? Councillor Thorpe. My apologies for the confusion there. Any discussion on number 2? All right, call the question. All those in favor? All in favor. Thank you, Ms. Mercer. Up next is the quarterly purchasing report, single and sole source purchases in excess of $250,000 and instances of non-compliance purchases. Ms. Lagan.
Thank you, Mr. Chair. This is a standard quarterly information report, and I'd like to thank Ms. Rushton. She provides rigorous management of the procurement function at the city. I've seen this function in many other entities, and I can tell you that it is in good hands. And because of that, I'm pleased to report that our procurement policy is being followed, and there are no instances of non-compliance. I'm happy to take questions.
Any questions for Ms. Lagan? Seeing none, thank you very much. Now we move on. Ms. Gurry, the draft 2021 key date calendar.
We need to do one more.
Sorry, did I miss? Oh, my apologies. Item G, 2021 premium cost increases. Ms. Lagan.
Thank you, Mr. Chair. We're here to provide information in advance again of the upcoming budget discussions. We are faced with a 2021 cost increase from WorkSafe BC of 19%, which is an exceptionally large increase year over year, as well as a significant increase in the Municipal Insurance Association of BC liability insurance. And Ms. Mercer and I believe the HR department representatives are here to discuss this further. Thank you.
Thank you. Ms. Mercer. I knew there was a reason I quickly glossed over this one.
So as Ms. Lakin said, the finance staff are currently drafting up the draft financial plan for 2021 to 2025, and we'll present that to council in late November. And as we do, we update it, the draft, we update it based on information we receive on rates and premiums and whatnot. So we have recently received, as Ms. Lagan indicated, some preliminary cost estimates for WorkSafe rates as well as our liability insurance premiums, and they are significantly higher than what we expected. And it was felt appropriate that we should bring that to you in advance of the budget presentations. So Mr. Van Horn, I can see he's on with us via Zoom. So he's here to answer any detailed questions about the WorkSafe increases, but I'll give a high-level overview of what the increases are. So with WorkSafe, we've been informally advised. We haven't received official word from them yet, but the initial indications are the rates are substantially increasing. And the estimated cost increase for 2021 is approximately $495,000 for the entire city. So this will not be entirely borne through, funded through taxation, as we will, some of that will be borne through the user fees as well. So our premium has primarily increased due to three things. One, our employer-specific rating increased slightly as our proportion of claims for 2017 to 2019 within our classification was higher. So what I call it WCB, WorkSafe, does is they look at our claims that we have over a 3-year period and it rolls. So next year they will be looking at 2018 to 2020 claims, and as we work towards reducing and working on that should be reduced. The second one is our base rate for our classification rose almost 19%, and that compares to 5% for last year. So it's a significant increase. So those two items represent approximately $420,000 of the estimated increase. And the third item is the maximum wage per worker increased to $100,000 in 2021, up from $87,100. So this change represents approximately $75,000 of the cost increase. So staff are, like I said, staff are continuously working to reduce our WorkSafe premium, our claims, which result in lower premiums in future years. However, some cost increases we have no control over, such as the base rate and the max wage per worker. So with regards to liability insurance premiums, we've been advised by MIABC.
We've got a few questions on the WorkSafe,
Yep.
So I think we'll address them now. Councillor Armstrong.
On the WorkSafe, in the report, it says $495,000, and when you go to the chart, there's a difference of $300,000.
No. So these are actuals, and what we budget and what our actuals end up being are a little bit different. So, and we haven't finished 2020 yet, but based on the calculations that Ms. Fuller's group has done within the budget, from our budget last year to our budget this year, it's a $495,000 increase. So actuals may actually be slightly different, but.
Where does the $2 million come from versus on the chart?
So the $2 million is what in our budgeting software that is what our system estimates the cost to the city will be based on the rate that we've been given for next year, yes. No, so sorry, and you also, so, okay, for 2020, that only includes 3 quarters. So we won't pay the 4th quarter until January of 2021. So our estimated total for 2020 is just under 1.6 million. So then there's the, your $400,000.
Councillor Gesselbrock.
My question.
Councillor Turley.
Thank you, Chair. Through you to Ms. Mercer. So I'm assuming that the WCB premium increase is based more on, by reading this, disability as opposed to new injuries. And the reason I'm asking that is that mean that the garbage collection with the new trucks is actually improved the situation with regard to injuries that started this whole thing off in the first place.
Yeah, and my understanding is our claims are going down, but I'll let Mr. Van Horn comment on our claims history.
Yes, through the chair to Councillor Turley, the review that's being done right now on solid waste collection has actually asked that same information. And what we've been determining is that the claims have gone down in garbage compared to our average from 2014 through 2018. Then the challenge with this is it is a lagging premium. Like, we had it was 17 claims in 2017 that were related to refuse collection, and for the past couple of years it's been 1 or 2. So it has been dropping off remarkably. The challenge that we have here, of course, is the hit that we're taking from the premiums increasing so much. When you see how they've crept up over time, including this max wage that's in the chart there, you see it's crept up a little bit, and then quite a leap like this is why we're seeing quite a hit here.
Thank you, Mr. Van Horn. Ms. Mercer.
Continue? Okay.
Please.
So our liability insurance premiums, as Ms. Legan said, our MIA-BC has announced that our estimated premium for 2021 will be just over $608,000, which is approximately $121,000 higher than last year. MIA-BC has cited the following reasons for our premium increases. So they're saying the COVID-19 pandemic is intensifying the hardening of the insurance market as a whole, resulting in dramatic premium increases. And as well, in previous years, there was a cap to limit year-over-year increases, so it has kind of a smoothing. And for 2021, this cap has been eliminated in order to fund claims adjusted to a higher risk environment. And so therefore, the city is seeing a larger increase for 2021 as the cap is no longer used to soften any increases arising from our experience rating, population growth, and some other factors. So the MIA Board of Directors will finalize their premiums at their meeting in December of this year. And there is a chance the premium could be reduced. However, it would not come in any higher than the 608 to 61. So my understanding is their staff are looking at ways to potentially reduce those premiums, but we won't know until December.
Thank you. I have questions from Councillor Martman and then Councillor Gesselbrock.
Thank you. Out of curiosity, in reading the report, in 2019, the premiums actually went down almost 40,000. So I was curious as to what would have created a downward trend in the premiums.
I'll let Ms. Gurry answer that. She takes care of the liability insurance.
Ms. Gurry.
Thank you, Chair. Through you to Councillor Martman. Basically, every year our premium is usually based on claims experience or risk exposure. So last year when our premiums went down, it was based on a number of factors that Ms. Mercer outlined, our population, our risk experience or exposure, pardon me, and our claims experience. So we had a good year. We also did look into what it would to possibly decrease our premium estimate for next year if we increased our deductible, because that, our deductible is $25,000 right now, and when looking at what we've paid for claims through previous years, we're in the right zone, MIA has said, so it could harm us more to actually increase that deductible.
I usually find increasing deductibles doesn't warrant the savings in premium.
Councillor Gesbach, did you take yourself off the list? All right, thank you. Councillor Thorpe.
Thank you, Chair. Through you, just for clarification and perhaps for the benefit of those viewing, Ms. Mercer. So I think it's important that the public understands that although our premiums are going up this year, we're getting dinged this year because of, number one, some factors which are totally out of our control, such as the rate that WorkSafe pays, and also for claims that we incurred 2, 3, 4 years ago prior to such innovations as the automated garbage collection. So we're playing catch up here on claims from previous years, and hopefully we'll see this trend reverse in future. But it's not because of anything that we have done or failed to do in this past year.
Through the chair, yes, that's correct. Some of it is in our control as far as reducing WorkSafe claims and some of our liability stuff. What we have control of that, we can reduce it, but a lot of this increase is out of our control. So we have no input on those changes.
And through the chair as well, to Councillor Thorpe, the reductions that we've made in not only the number of lost time claims we've had, but also the duration of those claims is going to help draw this number down. Because WorkSafe, basically, we pay $3 for every dollar that WorkSafe pays out on our behalf as a rough rule of thumb. And so reducing the duration of the claims and getting people back to work, doing meaningful work, even if it's modified duties or something, is paying off for us. It's unfortunate. It just takes a little bit of time for those efforts to be reflected, but there's a lot of people that work to make that happen, and hopefully in the next couple of years, Council will be seeing that as well.
Thank you, Mr. Van Horn. Any questions for Mr. Van Horn or Ms. Mercer? Mr. Rudolph.
Mr. Chair, just this was an information report, but it's in advance of coming to budget with, you'd see a cost escalation in that budget list of topics, and so this gave an opportunity to explain this a little more fully. It's also an illustration of the inflationary pressures that the organization faces that may help explain certain things to members of the public, because every 1% tax increase is a little over $1 million. So you start to do the math in terms of increases like that, you see the cost pressures that we face as an organization that are sometimes beyond our control. So in part, this was brought here just to give you that heads up that this is coming. And secondly, it's an illustration of how it's challenging at times to stay within the inflationary envelope that people sometimes talk about. So it's, it's a large number, and we thought you should be aware of it up front.
Yeah, thank you very much for bringing it forward. It's useful to have this prior to the sticker shock. Thank you very much. Appreciate the information.
And before I go, Mr. Rudolph had asked that I give an update on the current collection of our 2020 taxes. So we levied our first penalty on October 1st. As some of you may have noticed that you're getting more emails from residents. So on October 1st, when our first penalty was levied, we had just over $5.8 million in outstanding taxes. So that represents about 86.8% collection. And just for comparison, after the first penalty last year, although different dates, same penalty, we had an outstanding balance of just over 6.6, and that was 96.4% of taxes collected. So we're a little bit ahead of last year. And as of October 15th, we had just slightly over $5 $5 million in outstanding taxes, which is about 97.2% of collection. And to break that down to different classes, 87% of that $5 million comes from residential taxes, and just under 12% comes from business class. So I don't have comparisons for last year for that. Our report is only current day, so without a bunch of work, I couldn't easily get that information. But that's a quick snapshot of where we stand with our taxes. So from a cash flow perspective, we're in really good shape, and it's accredited to the residents who have paid their taxes.
Thank you. I've triggered a few questions here. Councillor Bonner.
Thank you, Chair. Do you attribute the more people paying their taxes to the fact that we've delayed the penalty? And do you think maybe that we should just keep it there going forward?
Through the chair to Councillor Bonner, I think, this is my opinion, I don't have data to back it up, but I think because the pandemic hit so late in the tax year, because we collect taxes at the beginning of January, if you pay your taxes through your mortgage or you pay it through a payment plan, most of your taxes were paid by the time you got your tax notice. So I think that was a large part of it too. And I would say we've levied less penalty than last year. So I would think that has a lot, I think delaying that penalty helped people as well. So perhaps the combination of the two, but it's pretty close to where we were in a typical year. So I'm not sure delaying the penalty had as great of effect, but we certainly levied less penalties. So people waited to pay, or they had longer to pay. So it did have some impact for sure.
I'd like to give a testimony to the efficiency of the tax department. We miscalculated our payments and we were $100 short at the end.
Yeah.
So we got a bill for $105 just a few weeks, almost immediately right after. We're all caught up, just let you know.
It's good.
Councillor Thorpe.
Thank you, Chair. Through you, apologies, I missed the figure on the percentage of taxes that were collected prior to the penalty.
Outstanding at the first penalty for this year was just over 5.8 million and 96.8%.
96, thank you. I'd written down 86, so now I'm really impressed.
That was the first one.
Thank you. So yes, credit to our staff and credit to the citizens of Nanaimo for being responsible and stepping up like that. Do we have any data on percentage or amounts collected by the normal due date, the July 1st date, as opposed to the extended date?
Yep, I have that information, and I have for last year. I don't have with me, I don't have any prior to 2019, but we had, after the first penalty, we had 96.4 approximately % collected at our July 2019 due date. So it's close. I can provide council with historic percentages. I have them.
It doesn't matter. I was just curious.
Yep.
But no, again, thank you very much, Ms. Mercer, and thanks to our taxpayers.
Thank you.
Councillor Gesselbrock.
Thank you, Chair. Through you to Ms. Mercer. I'm just curious, with the outstanding taxes, did we notice this year it being a higher percentage from the commercial side of things or residential, or is it sort of on par in terms of who's late?
And that I would, through the chair, I'd love to give you that information, but without our Tempest report is a little bit challenging. I can get current day, but I'm struggling to get a back date on that report. So if I'm successful in being able to ferret that information out of the system, I can give that to you. The only breakdown I have is for 2020 at this point. So it's the majority of it, the vast majority of it is residential and not commercial.
Yeah, I'm just asking out of curiosity, say, just in terms of COVID had an impact in a particular area. And also, I'm just curious, did we advertise a bit more on how to pay your taxes, and that tax season was around the corner more than we did in the past?
We definitely have a schedule that we put things out on, and because it was extended, we did more advertising and, you know, Facebook posts and that kind of thing, that it put it out there that the penalty date wasn't until October 1st. So we did promote that and advise the public, so.
I just remember the great video that was going around, and if that was a new thing or not, and if it had an impact, but thanks.
Thank you, Ms. Mercer.
Thank you.
Anyone else in the queue? Ms. Gurry, the draft 2021 key date calendar.
Thank you, Chair. Prior to December 31st every year, we come to council with a key date calendar and options for the next year. So in front of you today is a report with options for holding your Finance and Audit Committee meetings either the third Wednesday, as we currently do, or the fourth Wednesday of the month. The fourth Wednesday has been suggested as another option for you all because the third Wednesdays, the third week of the months have become rather busy for council because of meetings on Mondays. The Wednesday morning Finance and Audit, as well as Thursday evenings, are now the public hearing dates because of the change. So the fourth Wednesday has been provided as an alternate, should council choose to do so. And we are also recommending, previous to COVID, the meetings were held at the Service and Resource Center. And since COVID has happened, and to maintain physical distancing and have you all together in the room, we've moved down here. We are suggesting that that continue going forward. So your options that we're asking for you today is to choose either the third or the fourth Wednesday, hold the meetings in person here, and that's it. Thank you.
Thank you, Ms. Gurry. Got a question from Councillor Armstrong?
I just want to know why the time changed from 10 o'clock till 9. Used to always be Wednesday at 10. It was, wasn't it? No, we used to meet previous council Wednesdays at 10 because Councillor Brennan used to be swimming, so there was an issue, and they put it at, we were at 10.
Thank you, Chair. There was, sometimes we did, but it has been more consistently 9, I think, and this council's always met at 9.
Thank you.
Thank you, Council. We have 3 motions. The first one, though, requires the selection of the third or fourth Wednesday, if that appeals to someone. So I'll be looking for a motion. Councillor Thorpe.
Thank you, Chair, and I'm open to the will of council on this, but to get it on the table, I'll move option number 1, which is the third Wednesday.
Thank you. Seconded by Councillor Martman. Any discussion on that? Councillor Gesselbrock.
Thank you, Chair. It's probably 6 in one, half a dozen in the other, but I kind of like it on the third Wednesday. Right now, we have Thursdays booked for the third Wednesday as well. Wednesday's already a busier day.
Thank you, Chair. Through you to Councillor Gesselbrock. Right now, this is the third Wednesday. We've been meeting on the third Wednesday, and the third week of the month has become a bit busier because of public hearings are now held on the Thursday evening. So you have Monday meetings, Wednesday meetings, Thursday meetings. However, you do get them all done in that 1 week.
Yeah, that was my point, is I kind of like to get it all done in 1 week. Thank you.
Thank you. So any further discussion? The motion is for the third Wednesday of the month. Right. All those in favor? Thank you. We have no other business that I'm aware of, so we would need a procedural motion to move in camera. The reasons are outlined in the agenda. Moved by Councillor Hemmons, seconded by Councillor Gesselbrock. All those in favor? Thank you. And I say we'll take 5 minutes before starting the in-camera session.